But let us start the hour with our talk of the tape by diving into tech and your money overall and bring in Trivariate's Adam Parker joining us here on set in Post 9. Do we care? 12 days up, does it matter? It's a neat headline.
It's a neat headline. As you were reading that, I was thinking, what else happened in 1987? Well, in October,
and then actually we ended. People know that Black Monday or whatever it was, but we actually ended the year higher in '87.
Yeah.
A lot of people forget that.
Yeah. I guess I don't make much of it. I think it's one of those things where things can happen. I don't know if it really means that much. I mean, I think what will matter more are the corporate earnings reports we're going to get here the rest of this week and next week.
Yeah. I mean, it is a great headline if we finish up today, Dow up 12, because it'll make non-financial news, right? It'll make nightly news on NBC,
right.
USA Today, things like that. Is there any way that it does generate return because it gets people the Dow's up, what's going on with the stock market? Gets those sideliners maybe back involved, Adam?
There's no question that people are more bullish now than they were 6-7 months ago when the market was way lower. I mean, I'm making these numbers up, but if 0 is max bearish and 100 is max bullish, I think people started the year around a 10 and they're around a 40 or 50 now. So I don't think we're euphoric when I talk to institutional investors. I don't think people are incredibly bullish, and there could be more animal spirits for sure from here. I think what people struggle with is just the valuation where we are now. You kind of have to pay a little bit more than 20 times 2024 earnings at the end of this year to get a 5,000 S&P. Get kind of a 10% upside from here.
How much to get that multiple?
Over 20 times the 2024 numbers right now. So I think what people are struggling with is it's a little high.
It's not impossible, but it does sound difficult.
I think that's the challenge. I think you can create a case that the earnings season's been mixed but positive so far. We have big companies in front of us. And you could create a scenario that some of the margin pressures that companies faced are going to start to abate, right? Commodities have generally come down. Wage pressure could slow a little. Currency could help a little. So I think people are more optimistic than they were certainly 6-7 months ago.
We talked about it yesterday on Closing Bell, but I'd like to get your thought on it as well, because we know about, there's 7 stocks, 10 stocks, whatever, that kind of seem to run the show, right? They top hundreds of major ETFs. Their weight in the NASDAQ 100, while recently reduced, is still spectacularly high.
Right.
Not to take anything away from any of our other great, best-in-class earnings coverage, but literally, is it just Apple, Microsoft? Do any other earnings matter?
I think they do. I think other companies do matter. I think if you're trying to beat the S&P 500, and 30% of the index is in 7 or 8 names, then you have to manage your risk around those. I think you have to own all these names in some sort of market weight. They're not particularly idiosyncratic, so it's not like you could know something about them that nobody else does. I think 60 sell side and 8 million buy-side analysts cover them, right? So it's not like you're going to...
There's no dearth of information that's going to give you some kind of a delta.
Yeah, you don't know something that's not in the price. 80% of the returns can be explained by some macro factors, and they're really well covered. So my sense is they're risk management stocks. You got to own close to that 30% weighted them. Maybe you like, Microsoft and Meta more than you can mix and match, but your index weight should be pretty mirrored by your exposure, and then you try to make your alpha in the other 70% of the market.
I just wonder if there's alpha to be made in other areas of the market, to your point. I know we love the Microsofts, in part because they are so big, they are so important. Right. You also maybe like energy here.
I like
By the way, oil is about ready to hit 80 again. The OIH oil ETF is at 340. It broke above what looks to be some kind of resistance there. It's failed before. What kind of energy do you like?
Well, I mean, starters, I've been really wrong to recommend that this year. I mean, it's been our top choice for 3 years. It worked great for 2 years. It's been terrible this year. I've been surprised a little bit by supply in some places and a little bit weaker demand. I like it a lot again now, and the reason is I think that the earnings expectations are incredibly low for energy, down 29% this year versus last year because oil's down, and yet the overall market's estimates probably come down. So my sense is, where can I get upward revisions? Probably in energy if things tighten at the end of this year for next year. Yeah. They're cheap. They generate a lot of cash. The capital spending's down a ton. And I think demand will be pretty good. I think the biggest difference is most vehicles are still gas guzzlers. You just don't have that many
I actually
EV or
posted
hybrids.
something to Twitter/X today from quoting my friend Javier Blas over Bloomberg, which is gas demand in Europe is is rising. Gasoline demand in the United States continues to not only go up, but the estimates continue to go up. Even with a couple of million EVs on the road, Americans driving bigger cars, less fuel efficient, more miles. Have you been on the New Jersey Turnpike lately?
So is that the one to the west of New York?
It's the one that I'll spend 6 to 7 hours on a day, and I'm telling you, it's full. Doesn't matter if it's 3 a.m. or 3 p.m.
I stay on this island unless I'm going to the airport, but, but your point's well taken.